We were supposed to have, or to move now into Islamic markets, Islamic factoring to be precise. But unfortunately, neither Dr. Mohammed El Beltaji, as an invited speaker, nor his son, an efcom employee, Abderrahman El Beltaji, could make it to Frankfurt. Big pity. So I will take the role and give you a quick overview of what I know from what we've been doing over the last, I must say, years in this particular industry, in this particular ecosystem, subset of factoring. Super interesting. We're following, of course, the advice of FCI and all the members who are involved in Islamic factoring. So when we decided to move into this space was when we decided to go international. It was a little bit like a coincidence. The idea was, okay, let's go global. Where are we going? And when we looked at the Middle East in North Africa, we thought, yes, we know the numbers from FCI, pretty small numbers, but is factoring being done the same way there as it is being done elsewhere? The answer is pretty much yes, but there is one component. And that component is that these countries are Islamic-driven countries, and Islamic law, Sharia law in this case, also dictates the form and way on how to finance and do factoring, trade finance and factoring. So we had to learn, we had to go through a learning curve on what that means. Where are the differences between the way we do factoring, pretty much all over the world, and how it would be if we went into a Muslim country and we were going to comply with Sharia law. So if Dr. El Beldaji would be here, or Abderrahman, who is his son, a young fellow, early 20s, and I always say Abderrahman is a young guy in his early 20s, and he has about more than 20 years experience in factoring, Islamic factoring. You would think, what are you talking about? Michael was asking me this. No, Federico, let's cut the recording here. You made a mistake. No, we can continue, Michael, because that's what it is. He has been breathing, drinking the milk of Islamic finance for over 20 years because his father is a guru or an eminence, a scholar, someone who knows about it. He is a member of the IOFI, which is an accountancy for Islamic accounting based in Bahrain. So we consulted him and we learned what Islamic finance is and what Islamic factoring, let's call it, could be. Mm-hmm. Because there is no one thing that is, this is Islamic factoring, period. No, there's a lot of interpretations, and there are many scholars, and okay, we're technologists, we're the people who do whatever you tell us to do and convert that into an application. So it was not quite easy for us to figure out what shall we be doing here, because there is an interpretation A, B, C, D, murabaha, musharaka, and other wakhala agreement. So we learned the things. Oli was involved into this as well. We traveled to Cairo. We met with the people. We tried to understand. And we can tell that after 2 years, we're there and we have an application now that is compliant with Sharia law. We have Islamic factoring embedded in our application and can go out there, primarily with the so-called wakhala agreement workflow, let's call it. What makes it different? What we do normally and what in Islamic factoring is allowed? Well, first of all, you are not supposed to charge interest. Okay, you charge something else, but you don't charge interest. Okay, so we delete the interest part. You're not supposed to buy goods or receivables, in this case, that are not halal, not haram. Halal means that they're allowed under Sharia law. So no weapons, no alcohol, etc. Good. Okay. What else? You're not allowed to buy money for money. What does that mean? You cannot buy a piece of paper where you have money, basically an invoice, and give money for it. So you can't trade money for money. That's not allowed under Sharia law. So how to circumvent then this whole thing is with the instruments that I mentioned to you before. One of them being the Wahala agreement. So you become an investor basically in this thing. Okay, so this said, we have an application. We are Sharia compliant under IOFI. What else can we do? Let's go into the markets. And the markets are as diverse as in Africa or any other geography. And in the Sharia boards, which all the financial institutions, banks have, if you introduce an Islamic factoring product, they have to approve it. So Sharia board says, yes, this workflow is okay, and the application that's going to run it has to be also approved. Once approved, both of the things, then you're happy to go. Markets. Obviously, some of the largest markets are in the Middle East, and one of them moving these markets is Saudi Arabia, and the other one is the Emirates. Saudi Arabia and the Emirates are thinking in what's going to happen when oil is not going to be there anymore as one of the sources of income. And then they say, why not finance? Aha, okay. Like Pankaj was mentioning, Gift City in India, which is also a region in the north west of India, where you have this city dedicated to basically move financial products. Well, in the Emirates and in Saudi Arabia, they're thinking the same thing. And they're implementing it. So we said, hey, we have to go there because trade finance and factoring are going to be pushed from that region. So this is where we are right now. And when we go into other markets in Africa, be it in Egypt or like we're now in Western Africa, where we have also a large number of Muslim countries. You mentioned the languages spoken are French, number one, English, number two, and probably Arabic, number three, as lingua francas in the region. So that means that all these countries, when we tell them, yeah, we do factoring and we have Islamic factoring, then they're like, oh my God, what's that? That's an amazing thing. Tell me more about it. So Islamic factoring is something that we will hear everywhere, and not only in the countries that are Muslim countries. We've seen it here in Frankfurt, because in Frankfurt we have all sorts of banks. And we've had two banks visiting us here at efcom that came explicitly because we were communicating that we have this product. So Islamic factoring is a product that, you want it or not, is going to be there. And in this country, in Germany, we have, I don't know, is it 5 million or 6 million people that live here, that have their businesses, that are Muslims, and probably some of them would like to have Islamic factoring as one of the products they would like to use. So to all of you, our clients, think about that this is another product as the ones that we have already, and it's something that is coming. I was in Cairo 2 years ago, and Islamic League, that says perhaps something to you, which is like a confederation of Islamic states, was gathering in Cairo, and it was about finance. And so there was this person, me, talking about Islamic factoring to them. I'm not Muslim, I'm not from a Muslim country, and telling them about the opportunities. So Islamic countries are ready to go for this particular industry, for this product, and the forecasts are as enormous as many others in the factoring industry. that goes into the billions of transactions and if not trillions of transactions a year. Right now, very little. Neil, do you know how much it is right now? We're talking a few hundred millions perhaps, right? But this is going to change as well. So these are investments that we're doing right now in the future because we believe that these products are being and going to be sought. Okay, I leave it here. We're back now to Europe, and to be precise, to Eastern Europe, a region that has also been growing over the last years, decade. efcom has been present in some of the adjacent markets with partners and customers, of course, in Slovenia. We have partners here from Slovenia to Bulgaria, where we have significant market shares. So what applied to India, Africa, and the Americas, or Islamic finance markets, does also apply to Eastern European markets. Lots of similarities, but also with a special local blend, as we figured again yesterday, where Petra, Assis, and I were visiting a major banking group from Eastern Europe, talking about the similarities and the dissimilarities. There's always a special blend. So I'm very happy to have today with us Christian Ionescu, CEO and founder of Instant Factoring, a fintech platform focused on improving cash flow for small businesses and freelancers, particularly in Eastern Europe. And as I've seen right now, Christian, also in Spain? Okay. Question then to you, dear Christian. Also big welcome to you, and also a big thank for making your way from, I think the last time we talked, you were in Zurich, exactly, yeah. I've seen you on many possible factoring events in Eastern Europe over the last years, and I'm sure you have an excellent overview of that geography, financial landscape, and especially factoring market. So again, as the last speaker in this panel, international panel, what would you say are the biggest differences you see in Eastern Europe, European factoring as compared to other regions? And second, what would you consider we all can learn from these markets? Happy to hear your comments.
Thank you so much, Federico. And it's a fantastic pleasure to be here in the office of a pioneer of technology for the European market. So great to meet many of you, make new friends, and super happy to be here. My aim today, because I don't want to ruin the lunch break coming soon, is to inspire you a little bit with a different angle. So I come from the industry. I spent 21 years in credit insurance first. I was the CEO of COFAS for a few markets in Central Eastern Europe, covering a few markets for them for about 10 years. I decided to do an exit in 2012. So this is already like 12 years ago. And after setting up a few consulting companies, an investment bank boutique, then we came up with the idea to go back to what I knew very well, which was risk, credit risk, but do it in a totally different manner. We were looking at what was available, and as Federico says, Eastern Europe has been growing quite a lot, the markets in the region, and we said everybody is focusing on the top of the pyramid in terms of companies. No, we said, can we do something to help the small guys, the bottom of the pyramid? So that was the first idea. That was something that we felt it was super inspiring to help the small entrepreneurs to get to the next level. And we set ourselves with a mission to support underserved, underbanked companies to reach their full potential to 100% financial digital solutions. So we set up what was at the time the very first digital factoring platform in Southeast Europe. Okay, and there were some. We were not. I would say we didn't invent anything that was not seen before. There were already a few platforms in the US, a few platforms in the UK, one or two companies here in Germany. You probably remember Finiata, some of you. Poland was an early riser in this spectrum, and we decided to do that. So. Now, why did I say I want to inspire you? Because coming also from the corporate side, where we were looking to finance the biggest companies with big volumes, yeah, that's great. but I didn't feel myself at that time that I was changing the life of an organization like Siemens or one of the big corporates. If it wasn't me serving them with my credit insurance product or factoring product, as a matter of fact, there would have been another player in the market. But for the what we call the very small companies or micro companies, there was no solution because they can't come to a standard financial institution, a traditional. They will simply not have the balance sheet to be served, to be part of the financing strategy. So we set ourselves to do that. We've been doing it quite good, and since then, I liked a lot Mark's arrow to success. I felt that this is probably ours, you are showing us. We see a lot of challenges as well because we are creating something new in a new space. To give you some numbers, we started in Romania 6 years ago. The whole market combined in Romania 2 years ago in the traditional factoring sector, about 3,500 companies were clients of factoring belonging to banks or traditional factors. In the last 6 years, we have more than 8,000 companies who enrolled in our platform and asking for financing. That is like more than 2 times the whole market combined. When you look at the volume, however, the traditional factoring is 9 billion. We will do this year only 80 million. So we are representing maybe 1%. We're reaching to 0.9. So we have 2 times the whole population of companies in that country, but we only do 1%, not even 1%. So it's really microloans, microfinancing, microfactoring. And you can only do that with solutions like efcom is proposing, because you need a super technology to be able to process this automatically. So our promise to the market, and as the name of our company says it, instantfactoring.com, we promise our clients that the onboarding takes 3 minutes, sending us an invoice 1 to 2 minutes. We promise them an answer in 2 hours, and they should leave with the money the same day or the next day. So now, because many of you are in this sector, you know how tough this promise is to keep, because you need to do everything in 24 hours. If you can finance the guy, the company, you should be able to deliver when you make this promise to the market. We thought of ourselves, this is again nothing extraordinary. It's not typical for Romania, for Serbia, or for Spain where we are. It's a global problem. The World Bank publishes such data on an annual basis. The latest number I've seen, 100 million companies around the world lack access to financing. And that accounts for about 5.2 trillion need for financing that doesn't exist. It's 50% higher than all the credits in the world granted already to SMEs. So imagine if we financed 100 now all over the world, the demand is 150 to even higher, okay? So it's a huge problem all around the world. So that's why very early on, we said we need to go as soon as we can out of Romania, and then we went to Serbia, where we are growing quite nicely. Also there, I think we have like already in the 4 years, like 2 times the number of clients combined of the market. Again, the turnover is very small. The latest adventure for us, because we like also to set new paths, find new paths. It's in Spain, where the market is incredible, similar to what Mark was showing us in the UK and the second market I forgot, where the penetration was sky high. So very interesting to meet some of you here that represent Spain. So that's it in a nutshell. I don't want to bore you with too many details. I'm very happy. My aim is to inspire those of you who are very established in your market, maybe to consider that. You have an amazing partner, efcom. I know their product because I've seen it. I was in meetings with Federico and his team. I know what they can do. And you can actually be a pathfinder, a new market groundbreaker if you want. If you decide to go and also help a certain smaller community, which today is unserved in many countries, and I'm sure Germany is not an exception. So I hope I was short and I didn't take too much time. Thank you.
Super, thank you, Christian. Ladies and gentlemen, we're back from our travel around the world in 50 minutes, 55 minutes. I'm sure you have learned a lot, as I did, and I'm sure that you also have questions to our panelists. So take the chance. We have a few minutes to go, and I see a high hand raised over here. Nee, da brauchen wir noch ein Mikro.
The level of losses that we see in our industry. Neil, your figures, hugely enlightening, but quite old, I guess. And Mark, you mentioned it, which is specifically for your company. So the question is, as an industry, can we do more to highlight those figures and to promote those figures as a way of lobbying governments, lobbying state banks, to actually improve the profile and the willingness to support receivables finance factoring globally? Because surely that's our biggest strength, or one of our biggest strengths. Does that?
I think your point is an astute one, and what we have found is that the regulator or the party, even the banker who is looking to finance, needs to be educated with the basics. And you have to go, as Neil did, and talk about with the 75% average advance and a 4 or 5% dilution and a 0.5% loss. This is a profitable business. And I think, as an optimist, I think we're only at the cusp of AI helping us reduce that number even further. Because when you think about the number of manual transactions that we do to keep that number as low as it is, think about when we get that automated and perfected, and we have early warning systems. I have to laugh. I did a program on AI in London, 2 of them, and somebody asked me about, is it going to replace all of us human beings? And I said, how many of you remember Excel spreadsheets? 1979, an Excel spreadsheet came out, and all the accountants thought they were going to be displaced. Do we still have accountants? Of course. But I think if we embrace technology and partners who help us even reduce that number further, I think we have a very powerful argument to be made. But I think it's education, basic education, and having groups like FCI be the forefront and be our lobbyist, if you will, to help us, because we're only as strong as our weakest link. And when we have people that, are not doing what they should and make those losses higher than they are, it hurts all of us.
Yeah, I think we at 360T have been promoting this to our investors in India and UAE. And I'm happy to share, I was just sharing with Neil that we have investors from 15 countries in our platform, and all of them have invested first time in a factoring business. So yes, this education is very helpful, and we at 360T are using these data points, the FCA model to mitigate your risk to the regulator, to the investors, to the debt providers. And I'm sure at global level, we can continue to do that. Yeah, thank you.
I think just to make another point, Mark, it's interesting you mentioned AI. And the points are almost the same. AI can only really work in our industry if we share information much more. And it's the sharing of the bad debt information, which as an industry we're not good at, because it's difficult to get that information to use to lobby. So I think that's the message, isn't it? It's the actual increased sharing of information, even bad information like losses.
I think the other point to make, and if you saw the Pepperdine study looks at required returns by product. So you look at ABL, you look at factoring, you look at commercial lending. And when you compare factoring year over year to something like commercial real estate or asset-based lending, almost without exception, the loss is a fraction. And again, talk to a banker who's got a large commercial loan portfolio of office buildings anywhere in major cities all over the world and say, what's your expected loss in that? It's going to be more than 0.5%. And I think part of it is drawing parallels to other types of products which they have the opportunity to expand in, and showing that this, if again, properly run and managed, this can be a very profitable business.
Just for example, for FCI perspective and my experience, we have the last experience I had with some factoring company in Africa. The loss is around less than 1%. And we are working to define in Africa, we work for like 12 countries adopt the factoring law. We help central banks to know what it is factoring, to implement factoring law, regulation and supervision the activity. Otherwise, if you go to the court, if the judge doesn't know what it is factoring, probably we will lose the case. But you have a reason, because there is no definition of the standard, the best practice. So those people need to know. We engage this initiative to in different part of Africa, West Africa, Central Bank with 9 countries, in Nigeria, to train banks, to train lawyers, to train a judge for the court, to, in case of any dispute, they need to know what it is. If you saw factoring, this is factoring. If you saw loan, is a loan. If you say invoice discounting, this is invoice discounting. The treatment and the legal impact is completely different. So it's very important for banks, for also central bank, to know what is the best practice, what is the regulation, what is practice in different countries, to enable to understand what it is. Thank you.
Thank you, guys.
Thank you. Thank you, Nasuru, Mark, Pankaj, and Christian. I think they deserve now a big applause from all of us, right? Thank you.